We're back. This is Josh Jalinski, the financial quarterback. We're being joined by YouTube celebrity JJ the CPA. You can check out his YouTube by going to JJ the CPA. Hit the subscribe button. You're up to 65,200 subscribers. And it looks like your latest video is you beautifying yourself before the appearance on the program. So if you want to learn about a little behind the scenes, check out JJ the CPA's channel. Over 1,020 videos of nothing but financial goodness. So JJ, what any other tips for Ernesto before we move on to the other questions?
Ernesto, if you have any employees, definitely still look at the employee retention tax credit. Also, what many are not paying attention to is that there is still a sick and family leave tax credit. It's retroactive, meaning you can still be taking it all the way back to April 1st of last year. It just got extended to September 30. Now, it's for those that are affected physically by COVID, either themselves or family or getting the shot or recovering from the shot, if you will. And that tax credit, though, is a dollar for dollar tax credit for the amount that the employee is paid. Now, there's dollar limitations, which I won't get down in the weeds on that, but if you paid an employee and they were out with COVID, it's up to $511 a day tax credit. If you have an employee that was caring for, it's up to a $200 a day tax credit. And then here's the deal. It applies to the self-employed. The self-employed don't get the employee retention tax credit on their revenue or their net income, but the self-employed do qualify for getting this tax credit that can be huge. So many are missing out on that. And I will tell you this, Josh, and I know that you have seen a lot of my videos, and for my wonderful subscribers, part of the JJ CPA family here, and Carrie and Cam and Kevin and Greg, and we've got Robert of Philadelphia Salons, who's a lot of these have been from the beginning. But the thing to note here is that I am for firing your accountant if they're not reactive. And it was either Kevin or Mark that said, you have to call your accountant. And so what I tell people that come to hire me, I'm not taking on any new clients at present, but I always say, well, what was the issue? And if they say, well, they didn't call me back, I was, well, how often did you call? And or if they say, well, I don't get any advice, well, did you call them? And usually you're going to get your accountant's attention if you say, hey, I want to spend a little more money with you. I'd like to meet with you or talk with you. But I am a big proponent, and there's a lot of accountants, tax professionals, EAs, and CPAs, and the biggest downfall is they don't know how to say no. They just keep taking on new clients, and then it causes the quality to go down, but they just...
Or they don't charge enough. I mean, one thing...
Oh, I know.
I mean, sometimes I have people that come, there are some good CPAs I know, and they're like, oh, well, he didn't call me back. Well, I'm like, how much you paying him? And they're like, $300. And I'm like, well, that's why, so.
This is true.
So some of the accountants, you would do far better charging your clients double and actually being there for them. So we're actually giving business tips to accountants right now, which isn't the purpose of the show. But I love what Mark says. Mechanics don't call people with broken cars. Your CPA is an amazing tool, but you have to call. The workload is incredible right now. That's true. But I think as a profession, you're looking to elevate the profession. So you're the elevator.
Yeah, absolutely. Well, my second book, I'm going to grab it right here, is Cracking the CPA Code.
Whoa, look at that. That's a cool looking book. So, folks, we got to promote this book, Cracking the CPA Code. So this is if you're a financial advisor, if you're whatever, and you want to work with CPAs, we'll give you that book if you schedule a free webinar, business building webinar with me. Otherwise, you can buy it. But if you schedule
on Amazon, along with your book, Josh, along with your book. I've got it.
Yeah, what the heck is the title of my? What is the title of my book? No, I drew a blank for a second. The Retirement Reality Check, an Amazon bestseller. My mom bought it 3 times, and no, it really was an Amazon bestseller. So keep it up. I was on an interesting call last night with the creator of the ShamWow and all these infomercial, millionaires. It was very interesting. And I don't know why I'm saying that, but it was interesting. The world now is getting smaller, right? Like there are these apps like Clubhouse and Zoom.
Clubhouse is taking off.
I was on a Zoom call with entrepreneurs and millionaires till 2 a.m. last night. It was so much fun. And, but it was good. We're helping people. Greg says, JJ, Josh Jalinski, and Nick Saban, that's all we need for life. Well, I think you need a relationship with God, too. So I would put that in the Bible. So anyway, what other questions do we have? Josh, go ahead.
Yeah,
Sorry.
We got a couple other questions I see here. Greg Roll Tide from Alabama, that on that alone was ready to claim you his favorite CPA, but then he realized. But Greg says,
he realized I wasn't a CPA. Wait, he realized I wasn't a CPA.
Yeah. Then he came back to me. But anyways, we know he's having a great time there. Greg's been on probably so many of live shows. But he said first draw is applied for. How long does she have to wait for forgiveness to apply for PPP2 single member LLC? Here's the thing to note. Filing for forgiveness is not contingent on anything. You don't have to file for forgiveness to get PPP2 or anything else. You have 10 months following the 24 weeks after you got your money. So when you get PPP1, you have 24 weeks plus 10 weeks before you have to apply for forgiveness. That is a long time. It's about 16 months when you add it up. The other aspect is between applying for PPP1 and PPP2 is 8 weeks. So if you got PPP1 in January, the SBA announced Friday that you now can apply for PPP2 even if you got the first draw in January.
That's amazing.
Period of time there. Yeah.
So can Ernesto in this case, can he get 1 and 2?
Well, if he were to apply now in March and they extend it to May 31st, then he potentially right at the end of May could hit that. Cam Jen has a question. What is the easiest way to get the PPP if I'm a gig worker? What are the steps? Go to your bank, go online. Gig worker's huge because it's now based on line 7. Get your Schedule C from 19. If you don't have your Schedule C done for 20, at least do the work. I've got a couple of videos on how to do a fast-track Schedule C for a gig worker. But long story short, it's simple. If for the gig worker, you don't even provide any documentation, 0. You go in and you complete it. You should get your money quick. We got Russell McDonald out in California.
Well, let's go to Russell after the break. And then we're going to go to Debbie. Debbie's calling in to the listener call-in line at 800-321-0710. And folks, if you call us now, 800-321-0710, you get to ask me or JJ the CPA any financial question you have. And during the break, head over to retirementrealitycheck.com, buy my book, and you'll be eligible for 3 free gifts. Number 1, the Maximize My Social Security.com calculation, normally valued at $40. It'll be yours free if you schedule and keep your no obligation 45-minute strategy session. Number 2, the 27-point ultimate financial game plan for retirement, where you'll go over ways to potentially protect your assets, maybe mitigate taxes in your retirement planning, and potential growth strategies that you may be unaware of. And the final freebie is the Risk Analyzer tool to make sure you are not too risky in these uncertain times. A lot of you are worried about political turmoil and its effects on your stocks. Give us a call now, 888-988-JOSH. 888-988-JOSH. 888-988-5674. We'll be back after these messages. Okay, we're back. Debbie has a question on PPP. Go ahead, Debbie. You're on with Josh Jalinski, the financial quarterback, and Joshua Jensen, JJ, the CPA. Go ahead.
Okay. So I wanted to know, I'm putting in, I'm a small business, and I'm putting in $40,000 into a SEP IRA. Can I use the PPP money for that, or can I use the ERC credit for that if I can't use the PPP?
Go ahead, JJ.
Oops, I had myself muted on there. So you're putting money.
Well, that's a really nice jacket. Real quick, before you get to the answer, that's a really nice jacket. Where'd you get that?
You know what? I got to keep up with you, my friend. I believe I got this. It's Peter Millar.
Oh wow!
Peter Millar.
I get mine at the Brooks Brothers outlet on Black Friday.
Yes, you and I talked about that. Most of my clothes come from the very similar store, Brooks Brothers, and getting their deals at the outlet is phenomenal on that. But on the PPP, you know what? I broke my concentration. Tell me again, and I was answering some questions. I thought this question was for you, and I apologize. Can it be rephrased, or Josh, can you sum it, or can the listener?
Yeah, rephrase it. Our beloved listener, go ahead.
Okay. So I'm putting in, say, $40,000 into a SEP IRA for our employees. And I wanted to know, can I use the PPP money for that, or can I use the ERC credit?
So believe it or not, on the PPP, you can put money into a SEP because it's employer paid. It's going to retirement, and therefore it is able to be included. The beauty of this is that with PPP, it's in addition to the wages. The other beauty of that is that if the owner is getting wages, which should be an S Corp or a C Corp, the amount of money that's going into retirement, even on the owner, can be included. There are some limitations on that. And, on that real quick subject, I believe it was Steven said, hey, might ask Ernesto, but I'll throw it out versus a question. But Ernesto, know this, that if you are filing an S Corp or a C Corp, for you to qualify, you have to have paid yourself wages because that's based on wages. And then there is a cap on anything, whether you're a Schedule C filer or on the employees. So for each, the cap is $100,000 divided by 12 times 2.5, or $20,833 is the cap for the self-employed. And then for each employee, it is a cap of $20,833. But to the wonderful caller, the thing to note is that, yes, there's a cap on the wages, but there's not a cap on the amount. Now, the one last thing I'll mention to you is that the amount of SEP, though, is not just the full amount. It would only be the amount applicable to 24 weeks. So if it's an annual contribution, if you will, then you would take, that dollar amount divided by 52 weeks times 24 weeks, and then that'd be the amount you can include in PPP forgiveness for the employees. And then for the owners, that is going to be something that's capped at a 2.5. You would take that dollar amount divided by 12 times 2.5. So there would be some minor limitation. Now, on ERTC, you can use it for whatever you want. The requirement is just simply you paid the employee. The money that you get, you can use for whatever it is that you want for your business. So, yes, you would be able to use that money to put into the ERTC, or ERTC monies into a SEP.
Okay. All right. Great. That's great news. Okay. Thank you very much.
And let's talk. Subscribe. Yeah, be sure to subscribe. And you can also call us for the webinar, 888-988-JOSH. Here's the thing. A lot of people are not taking advantage of retirement plans as a small business owner. Let's talk about retirement planning for small business real quick. What are some things that the small business owner can do right now to save money on taxes and sock away money for retirement, JJ?
So we now know that the IRS, breaking news probably 72 hours ago, have extended the deadline for everybody related to 2020 filings. The one weird note here, though, is that they did not move, the IRS did not move the due date of making first quarter estimated tax payments for 2021. That's still due April 15th, but they've moved the deadline 1 month. We'll take what we can get. So now everything is due at the federal level on May 17th because the 15th falls on a weekend. So the thing to note is that for the self-employed, you would then have till May 15th, the reason to mention that, to put money into either a SEP for yourself or a SEP on your employees' wages. And you have even beyond that with the SEP, because if you file an extension, you can fund it on or before the extension due date and get the deduction for the prior year. What is the SEP? The SEP typically is up to 25% of whatever your net Social Security or your net self-employment income for the Schedule C filer, and then up to 25% on your employees. And with the SEP, you have to treat everybody the same. If you have employees, you have to do the same percentage across the board. It goes to the employee's account, you get the deduction. Of course, you also know we can have money that can go into an IRA, but related to a 401k, related to a simple, all of those have to be done through wages, and therefore anything now wouldn't be applicable because it would only be through wages in 2021. The other aspect, though, it's not about saving taxes. But you and I are fans, and many, if they're not, they're just not informed. They have not taken you up on doing a consultation with you. And that is this. When we're looking at a lifetime of tax savings, we're looking at generational tax savings. It is.
Well, we'll talk about that, and we'll reveal
life insurance,
some generational tax savings opportunities when we return. This is Josh Jalinski, the financial quarterback, with JJ, the CPA, giving some generational wealth building opportunities as it relates to your taxes. Also, folks, have you looked into defined benefit pension plans? Have you looked into Roth 401ks? A lot of you make too much money to do a Roth, but you own a business, you can do a Roth 401k. Call us right now. A lot of small business owners just do the SEP. SEP's great to go retroactive for 2020, but you want to look at other opportunities for 21 as well. So call us 888-988-JOSH. We'll be back after these messages. Talking generational wealth building opportunities. Go ahead, JJ. I thought life insurance was for losers, JJ.
I'll tell you what, it's for the Rockefellers. There's a reason that those that have money look at this, understand it. Not all products are the same, but it's whole life insurance. That's right. You might have some people that just said, oh, I'm out of here. Well, the reason for that is that you're just have been misinformed. And Josh, what's your take on whole life insurance in general? Because you and I have it on our kids.
Yeah, I have it on my kids. I have it on my kids. I have it on myself. Why? You're guaranteed to die and you're guaranteed to pay taxes. So why not protect your family, grow cash value tax-free? Also, the cash values are liquid, can be used for life, can be used for real estate, can be used for other investment opportunities. It's a great place to store cash. A lot of people we work with have significant amounts in the bank earning 0% to 1%, and it's much better to get greater utility on that money. It's very funny, JJ. We were ahead of the curve. There is now a TikTok celebrity. His name is Curtis Ray, and he's promoting some type of life insurance strategy on TikTok. The guy went viral. I've been having people asking about me. So we got to go on TikTok. You and Amanda have to do some dance with me. I don't know if anybody wants to see me dance, but apparently we're missing out. But life insurance is hot again. I've been having people asking me, they say, what about this life insurance thing I've been hearing? But here's the thing, you don't want to do that alone. If it's not properly funded, you could hurt yourself. And some people will say, well, I did that in the 80s. Well, that's because they did something called vanishing premium. They weren't ethically selling the product. So make sure you are careful when you're constructing it, but it's a great way to have conservative wealth. Final comments on that, JJ?
Yeah, Greg mentions on the life insurance. So we all are going to die. It's not we're betting you will die. We all will die. Hopefully that's not breaking news for anybody. It's
breaking news. Breaking news. Yeah. We all have a 1 in 1 chance of death.
Yeah.
But to me, that's liberating.
Greg knows I'm kidding around. Yes.
To me, if I know, real quick, if I know that my heirs are going to get millions if I die tax-free, then I can enjoy today. I can take that vacation. I can love life. So I'm not worried about death. It's liberating because I've protected those who I love the most in the event of my untimely passing. Go ahead, JJ.
Well, really at the end of the day, the whole life insurance, it's not built the same. You have to look at it. And if you already are coming with the mindset that it's a scam, then you need to pick up my first book, JJ the CPA here, Top 60 Questions. I break it down simply. I bet Greg has a copy. I break it down simple about life insurance. People just get angry about life insurance because they don't want to talk about dying. So they don't want to talk about dying. So how do they make that subject go away? They just get mad so no one will talk to them about it. One of the reasons I'm a licensed insurance professional is because, yes, there are a number of life insurance salespeople out there that are snakes. I get it. But when the CPA is involved with it, Josh Jalinski is involved with it, you should be able to count on it, but you can't do it alone. You really shouldn't do it without Josh. I won't be able to sell you any life insurance. Only Josh will be able to do that.
Thank you so much. This is Josh Jalinski, the financial quarterback. I was going to say Josh Jalinski, the CPA, with JJ, the CPA. I am not a CPA. I'm not giving tax or legal advice. So give us a call, 888-988-JOSH. If you want the free retirement reality check, go over, subscribe to my YouTube channel, The Financial Quarterback, and subscribe to JJ the CPA. Up next at 800-321-0710, I answer any financial question you have.
The preceding program was sponsored by the Jalinski Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.